CNBC-TV18, embarking on a quarter century of excellence.
Welcome back, and joining us on the show now is Gill. He's agricultural options broker at Marex. And Dev, hi, thank you so much for joining us. Last day of the year, the second last day, and you're still working, is it?
Yeah, always working. It's actually incredibly volatile time. So we're happy to be here, and thank you for having us.
Dev, on sugar then, and we did see a 15-year highs in 2023, and from those kind of levels, it's been a very sharp correction in the matter of last 1 month itself. One, how do you look at this activity within the prices in global markets?
Yeah, thank you, Manisha. I think, for our perspective, the market has been incredibly volatile, as I alluded to. We've done a huge amount of work in a very short period of time on the downside. And, digging down into that, obviously the rumblings in India in terms of the diversion and exemption of sugarcane juice into ethanol was one input, but a lot of that has actually been speculative unwind, and that's been by far and away the biggest driver in this move and correction.
Dev, a lot of global banks and brokerages now believe that the sugar high and lows, the way that we've seen in 2023, perhaps may not get repeated in 24, with most calling it a year of consolidation. What's your sense?
For us, again, looking at what the driving force was in 23, at 20 cents, the market perceived a surplus fundamentally. At 27 cents, they perceived a deficit, and some now call for, for a mild, small surplus. Now that we're now vacillating around 20 cents, our perspective is slightly different. If I may offer it, in terms of what we perceive is what has changed in the marketplace today, and therefore feeding in and looking at 2024. The only thing that really has changed for the world market is that we have found more sugar from Brazil, and that's really owing to beneficial weather, drier weather, despite an El Nino, which would tend to make a kind of slightly hampered Q4 for Brazil in terms of crushing. We found more sugar there. They've been crushing more, and therefore, because of the drier weather, they've been able to ship more. So, whereas we were looking at 40 million tons for the world market estimates for Brazil, we're probably going to be closer to 43. India really isn't impactful at this point in time.
So, Dev, what's your sense on price move then, or a target for 2024? Also, then, are you looking at a sugar surplus rather than deficit for the next year?
Yeah, so thank you, Manisha. I think for our perspective, again, focusing on what has changed, we found a bit more Brazilian sugar, but the reality is, even with all these changes within India, it doesn't look like they're going to be impacting the world market. And in fact, we see the import parity for India at 19.5 cents, where Indian domestic refiners would import and then re-export. So we actually see the market as somewhere that needs to find a footing. It should find a footing soon, and prices should correct. We don't see that the prices here reflect the fundamental justifiable, let's say, equilibrium point. So we do expect prices a few cents higher for next year, and we expect that with the speculative inputs right now and positioning towards year end, as you rightly point out, this will be more, this will be clearer and more definitive in Q1 of 2024. So a couple of cents on the upside, we think, to kind of balance out and reflect the true fundamentals as opposed to just pure spec liquidation, which we've seen in a short period of time, which has overwhelmed the market to lead us to where we are today.
Oh, absolutely. But do you see a level of 27, 28 come back in the next year?
I think, for us to really understand 27, 28, we'd have to understand the weather and the weather impact. We have El Nino cascading into 2024. The impacts of that, again, are slightly unpredictable today. But, again, if we look at what has changed to lead us here, it is purely on Brazil and 3 million tons of additional sugar, which again, it doesn't justify the massive spec liquidation that has led us to this point. And that is sort of what we want to emphasize. And yet we still have consumers in China and Indonesia close to stepping up at current levels that we see in terms of prices in the world market. So lots to talk about there.
Absolutely. Dave, as always, thank you so much for joining us. So, yes, a very sharp correction in the international markets from a 15-year highs to an 88-month lows is what we've seen in case of prices. But as Dave says, not justified with the kind of fundamentals we have. So further increase in prices on the higher side, a correction is what you could see in the next year there. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.
CNBC-TV18, embarking on a quarter-century.
Thank you for watching CNBC-TV18. For all top headlines and updates, follow us on our social media platforms.